Hello everyone and welcome to Crypto Atlas. This is an update video for AMC, the movie theater stock. If you guys are new to the channel, feel free to hit subscribe. Feel free to also hit the thumbs up like button. It definitely helps us out with the YouTube search algorithm. And feel free to share this video on social media if you think anybody else might find this video to be helpful. And please keep in mind, everyone, I'm not a financial advisor. Everything I'm sharing is my own opinions, my own research, and I highly encourage you guys to do your own research. Let's go ahead and get into this. So the first thing that I want to go ahead and really touch on is the main thing of this video, which is about what would happen if the whole stock market started to crash. Would it be a good thing for AMC? Would it be a bad thing for AMC? Well, I'm leaning more towards the positive side. Of course, anything could technically happen, and I can't promise or make guarantees on these things. But let's go ahead and cover some of the main key points of things that we're seeing happen right now and how that kind of plays out. So over in China, for example, this just happened over on Friday, and now it's having more ramifications with the market open. As far as for Monday, we're seeing a lot of these tech kind of based companies over in China starting to get pulled down in their prices. And it has to do with this new regulation against private tutoring rules over there. So just to elaborate a little bit further, the rule changes, which are much tougher than previously expected, have put at risk billions of dollars of public and private capital plowed into the sector over the last few years on hopes for continued demand in the world's most populous country. The move triggered a massive fall on Friday in the Hong Kong and New York listed shares of Chinese private education companies, and the sell-off continued on Monday, with some of the stocks plummeting between 30 and 40%. These are big numbers. China's education industry sub-index dropped as much as 14% on Monday. Sorry, so to clarify, it's more focused on the education industry space instead of, I said, the tech industry space. So it's the education industry space. So basically what this means is that when you own a bunch of different assets, like a hedge fund group, and you have to pay up on margin calls on things, well, where is your other asset money going to really come from? You're going to have to sell whatever you can. So the fact is that they're going to be scrambling for these things. It's going to lead to more sell-offs of people selling other stocks. But then when all that money is going into just a few stocks, right, people are still looking at opportunities to make money. And this is where I think the positive side comes into play. Because if you see that AMC is shooting up, it's like $1,000 every 5-10 minutes, something like that. And your other stocks that you've invested into, they're all dropping down. Okay, well, you could put some of the money over into AMC. Right? Maybe that'll help recover some of your losses that you're taking place over on the other side, which then that just adds more fuel to the fire, and it causes the AMC or the GameStop prices to skyrocket even more, because you got the hedge funds who have to buy back the shares, but then you've also got everyone else that's just voluntarily wanting to also get the shares. So it's a supply and demand mechanic. Now, the thing is that the NSCC is proposing new rule changes. A lot of people have been talking about this. I kind of talked a little bit about this in a previous video. And essentially what that would do is help help offer some more security within the infrastructure for the New York Stock Exchange, so that the hedge funds, they can essentially take their long positions. They receive cash. They're giving their long positions as collateral. The cash that they receive, they can use that to be able to pay off the debt that they owe. And then the NSCC would essentially own these stocks, from my understanding. And so by doing so, it's not actually causing those to be sold. They're still able to be retained on the market, and that way then it doesn't have the price completely crash, but you do have that supply influx that's coming in, or the demand influx, sorry, that's coming in for the supply of AMC movie theater stock. All right, so let's go ahead and cover a couple other things real quick for you guys. Taking a look at the Stonko tracker right here, we can see that there are, for this Friday, almost 36,000 calls in the money. Just a little bit underneath that. Shares available to borrow is at 350,000. We got 2.5 million ETF shares available. Check this out. As far as the options expiration data right here for, oh wait, sorry, let's go ahead and go down a little bit further. This is what I wanted, was the dark pool percentages. So the dark pool percentages being documented from last Friday identified 71.4%. That's insane. And I talked a little bit about this before too, but think about that. 7 out of every 10 trades are being suggested, according to the data, they're taking place in the dark pool. we don't have access to the dark pool, guys. That's the important thing, is that like all the major trades should really be taking place on the light pool, where everyone has an equal opportunity. So this is very disturbing. In fact, it goes on even further to get more disturbing off of this, because we can actually take a look right over, let's see, where did I go? Right here. 71 to 73% wasn't enough on dark pools. Apparently, as today is showing 81 to 87%. This is ridiculous. I didn't see that. But if this person is documenting this, if other people saw the same thing, I don't know if you guys saw it or not. I'm just letting you know I didn't see it. But this individual, and they're getting a lot of support on this statement here, 81 to 87%. Can you imagine 8 out of 10, almost 9 out of every 10 trades is taking place in the dark pool? That's insane. That makes no sense whatsoever. As far as the data goes right here, why is there a big ad that's showing up right now? That didn't happen before. I guess they added that. Over on the dark pool itself, we can see positions. It's at a negative 144 million, which is still insane. Position is at 5.8 billion. It's just ridiculous. The Ortex reports are showing that the short interest rate estimate is at 14.59% of the free float, suggesting that it went down just slightly from the earlier date reports, but still over 10%, looking good. Ortex, a lot of people say it's not as accurate as it should be because they have to only report what's being told to them. They can't speculate on anything. I agree with that. I do believe that the short interest rate is much higher. I would estimate personally at least 10% higher than what you're seeing it as. So check this out. AMC at the SEC just appointed General Gerber Grewal as Director of Enforcement. Apologies if I said the name wrong. The same person who sits on the Board of Trustees for the Public Employees Retirement System, which just purchased 229,643-ish shares of AMC. That's a pretty good sign. I mean, if they're big supporters of the AMC movement, hopefully they're going to try and enforce more policies much more strictly. AMC State of New Jersey Pension Fund purchased 229,000 shares of AMC in Q2, worth about $13 million. Maybe they know the squeeze is coming and do not want to miss out. I mean, that's absolutely awesome. 229,000 shares. And then just take a look at the price action real quick right here. We still have our major level support established at $35.90. We're going to see some major resistance taking place for tomorrow. That's going to be right around $43.26. And then the next major level is hitting up here on the Fibonacci sequence. That's at $44.34. Nice to see that the volume is kicking up a little bit here, but you can still see it is nowhere near anything close to what we've had previously. Something else that's nice to point out is that we have a green candle for the daily position, and the last 3 trading days were all red, and then we had a couple green, but we've been dealing with a lot of this downwards movement, right? Started to get a little bit of recovery, everything's looking really good, then more downwards movement. So we're on the path moving up right now. Things are looking pretty good, but we're not out of the woods yet. I think realistically, if we can get back over here to the 0.5 on the Fibonacci sequence and break up above that, then there's a lot of different things. The technical side, the psychological side. I mean, there's so many different things that will suggest that we're still on the route going back up. And as time goes by, these margin calls have to get called. The NSCC new rule, if that actually goes through and gets executed on soon, then I think that's all very possible. That's at a $54.22 range. Okay, so I'm going to go and wrap up there. Once again, guys, I'm not a financial advisor. This is my own research. I encourage you guys to do your own research. I hope you enjoyed the video, and I do have referral links in the description, so if you guys want to get free cryptocurrencies or free stocks, feel free to use those. I actually just got my BlockFi card today. By the way, I got a package in the mail. I'm like, I didn't order anything, and it showed up. It's in a really cool little box and stuff. It looks nice. The card's got a little bit of weight to it and everything. So I'm happy with, like the product at least for that. But I'm gonna be more happy with the fact that I'm gonna get 3.5% back in Bitcoin by using the credit card with that. So if you guys are interested in looking into all that stuff, the info's there. And yeah, let us know in the comments how you feel about everything going on right now and the information that we shared today. If you're new, don't forget to hit subscribe, hit the thumbs up like button. Feel free to share the video. It's appreciated if you guys do that. And I will see you guys in the next episode.